give it one more minute.
Yeah.
We're good?
Excellent. I guess we'll get started very soon. Thank you everyone for joining. My name is Charles Dossi. I'm the CEO of the DYDX Foundation, and I'm very excited today to welcome every one of you for our first DYDX monthly analyst call. These are calls we will be running on a monthly basis to make sure that the analyst part of the community of DYDX gets covered with everything you like, such as data, metrics, graphs. So we will be touching on many different updates. Some of them are familiar to you because you follow DYDX on a regular basis. Some others are much more deep dive into the protocol metrics, the token metrics. We will be looking also at the recently launched DYDX ETP with our friends at 21Shares. So a very packed agenda for today's call. I really want to welcome all of you. Today I'm joined by some great minds from the DYDX ecosystem. Josh Watts, coming from the DYDX Foundation, is CEO with the DYDX Foundation, as well as Max, coming from the 21Shares team. They will be joining me in the conversation in a few minutes. So during this call, we will be touching on different topics such as the market overall and the macro environment around DYDX and the crypto derivatives. We'll touch as well on the DYDX protocol, protocol overview, the metrics such as the number of transactions or the number of trades, as well as the number of new markets which have been listed on DYDX. We'll touch on token metrics. We'll double click as well on the buyback program. This buyback program has been launched a few months ago now, and we want to make sure we get send your way as the latest update on that. We'll touch on the DYDX ETP, which was launched last week, and we will be also looking at some announcements and the roadmap coming up for DYDX. So without further ado, let's dive in and let's double click on the next slide on how the market of derivatives has been evolving over the past months and how this supports the DYDX ecosystem overall. So as you all know, the DYDX platform is focusing today mostly on crypto derivative, and that's a very important market in the world of crypto. As an illustration, in July 2025, more than 6.5 trillion with a T have been trading on crypto derivative overall. So this is a market which is representing the vast majority of the trading volumes for the crypto industry overall. It represents about 75% of the global trading volume of crypto, 25% being spot market. So DYDX focuses really on the largest and most active market. And within this the crypto derivative market, you've got two subsections. One way people can express their opinion on the market via trading, they will be using, for example, centralized exchanges, the Coinbase, the Binance of the world. But more and more what we are seeing, and which really kind of reinforce the thesis of DYDX, we see this massive market of crypto derivative migrating away from centralized venues and essentially expanding into on-chain venues such as DYDX. So we've seen over the past 30 days more than $600 billion of trading volume on-chain for crypto derivative. That's a number which keep growing, and in terms of market shares also, the on-chain platforms such as DYDX, such as Drift on the Solana ecosystem or Hyperliquid are all basically gaining market shares against their centralized exchange peers. So that's give you a little bit a background on how the industry we are building upon is evolving and how this is going in the direction of DYDX mission and DYDX vision of on-chain crypto derivatives. We'll move to the next slide, please. So now I'd like to double click with you guys on the protocol overview, and for that we have Josh Watts from the DYDX Foundation to help us navigate those numbers and metrics. Take it
For
away,
sure.
Josh.
Thank you, Charles. Thanks everybody for being here. As Charles said, I just want to give you guys a quick overview of key fundamentals that are, going on inside of the ecosystem right now. We're incredibly proud of all of the activity going on DYDX chain right now, and just want to highlight a few of those key numbers. So starting from left to right and then top to bottom, the first kind of key stat here is that across all versions of the DYDX protocol, we've hit over 1.5 trillion in lifetime volume, which is a huge number. And I think goes to show that the DYDX protocols, current and past, have been incredibly successful. In terms of protocol fees generated on DYDX chain, we've exceeded 60 million in USDC that's been paid to the exchange, which has been fantastic. Inside of DYDX chain, you can now trade over 230 separate markets, and almost 50 million USDC has been distributed to DYDX chain stakers. In terms of looking at the token holders now, we have over 80,000 individual token holders holding DYDX. And one of the main key features on DYDX, which was released about a year ago, is the Mega Vault, which has now reached almost 30 million in TVL. So double clicking quickly on trading volume, I think no surprises here. Dominant trading pairs are your majors, BTC, ETH, and Solana, driving about just over 60 billion in year-to-date trading volume. In terms of protocol fee generation, when we look at the 60 million of protocol fees that have been generated since launch, proud to say as a DYDX stakeholder and ecosystem participant that 45 million USDC has been distributed to stakers of the DYDX token over that time, which is really, I think, advantageous for somebody who's holding DYDX tokens. You're staking DYDX and you're earning USDC, which, you're not earning an inflationary reward, and you're not earning native protocol tokens. Your staking rewards are coming in USDC, which I think is super advantageous in DYDX. Talking a little bit further about the Mega Vault. So the Mega Vault is effectively DYDX's fully on-chain solution to providing liquidity to new markets on DYDX. There's always this chicken and the egg problem, or whenever a new market is launched, there's always this problem of who's the first to provide liquidity and how do we ensure that we are building towards sustainable and successful market structure. That's where the Mega Vault comes in. The Mega Vault is effectively a mini AMM with sub vaults sitting on every active market on DYDX. So as soon as a market is listed, the Mega Vault can spin up a specific sub account on that given market, and the vault can immediately start quoting so that retail traders and market makers can immediately come in and place orders with reasonable liquidity. I think, Mega Vault is still largely a work in progress. You see many flavors of different kind of vaults in the crypto space. Happy to say that our vault is currently just under 30 million in TVL. And when we look at the estimated APR based on, the 90-day rolling average, it's sitting at around 10%. So you can earn a pretty solid return on your USDC, when you compare that to other alternatives in the, various DeFi ecosystems. And just a quick overview of token metrics, going back to, I think, some of the main key stats that we highlighted on slide 5. But when we look at the total amount of DYDX holders, this number has been increasing, week over week, month over month. I think something that we're incredibly proud of at the DYDX Foundation is how many people are actually out there receiving the token and staking the token. Active stakers is now up over 24,000, which is fantastic. And we are at about 30% of collective supply being staked to DYDX chain validators. Again, the only way that you can earn staking rewards and achieving that, 8.8% median APR in the first half of this year is to stake your DYDX tokens. By staking your DYDX tokens, you are effectively providing security to the network and enabling the validator of your choosing to potentially propose more blocks on DYDX chain. When we look at wallet growth over time, I think, also trending in an extremely positive direction. That is a combination of, people coming in to actually trade and use the exchange, as well as people who are coming in and holding DYDX tokens and are staking their DYDX tokens to validators. When we look at stake supply, double clicking on the stat that I presented just on the last slide, quick highlight for everybody is that when you have a DYDX token and you decide to stake it to a DYDX chain validator, there is a lockup period for 21 days, which if at some point in the future you decide to unstake your token, you need to wait 21 days before the token is like liquid and transferable. And that is really just so validators and the network has a chance to load balance in the event that there is like a large unstaking event. I will say that 21 days is extremely common in the Cosmos ecosystem, as well as kind of other crypto ecosystems as well. At the median APR of 8.8%, I think staking DYDX is extremely attractive when you compare it to things like ETH staking or staking for other, crypto products. And again, already highlighted this, but I think it's extremely important to take note of the fact that all rewards are paid in USDC and are not related to inflationary native protocol rewards. When we look at DYDX stakers over time, I think, the pace has been very, very positive in terms of the amount of new blood coming into the ecosystem and deciding to stake their DYDX tokens. In the last 2 months alone, we've seen more than 5,000 unique addresses come into the ecosystem and stake their DYDX tokens. I think the product roadmap from DYDX Labs has also highlighted that there is the potential for some increased utility for the DYDX token in the near future. And I think we're extremely bullish on the direction that the statistics are moving in terms of staked DYDX holders. Double clicking a little bit more on the staking APR. Again, the staking APR is inextricably linked to the amount of volume and fees that the exchange is doing. So effectively, the way that it works at a fundamental level is as soon as maker and taker orders are filled in a block, staking rewards are immediately and programmatically sent to an individual staker's DYDX chain address based on their pro rata portion of the total stake weight in that block. So that means effectively that each block, if you've decided to stake, you're earning USDC in an automatic fashion without needing to do anything. You do have to go in and claim those rewards. Then you have the option of purchasing more DYDX and staking or using that USDC to trade on the exchange. So there is minimal user friction here, and you have the flexibility of deciding what to do with your staking rewards. I will say that staking rewards, because they're tied to exchange activity, they are fairly volatile. We are pleased to see that like the median staking APR though has been extremely competitive when you compare it to other kind of products in the crypto ecosystem or the DeFi ecosystem specifically. I'm going to pass it off to Charles now just to walk through some key stats with respect to the DYDX buyback. I appreciate you guys being here. Thank you for your time.
Thanks a lot, Josh. So yes, happy to double click now on the DYDX buyback program. So the buyback initiative has been initiated by the community via governance vote, and this program started late April this year in 2025. So far, there was more than 5 million DYDX tokens which have been bought back through this program. It represents a value of about $3.3 million. And the way this program works is essentially at protocol level, 25% of the fees generated by the protocol are essentially allocated to buyback of DYDX token on the secondary market. So every time there is a user of DYDX deciding to place a trade and paying a fee, 25% of this fee goes directly to the buyback program. The buyback program is operated by the Treasury sub-DAO from DYDX, and Carpet Key is the operator of this Treasury sub-DAO, and they are essentially buying on regular basis tokens of the market to stake them again and provide some additional security to the DYDX chain, removing those tokens from the secondary market, but also generate it for the DAO, therefore for the community, some additional USDC rewards. In the context of this buyback program, I think it's very important as well for every analyst on this call to capture that 93% of the DYDX tokens today has been unlocked. So whenever this program is buying back tokens on a regular basis, it's essentially very much impacting the supply of tokens on secondary market, knowing that the vast majority, 93% of the tokens of DYDX has been already unlocked as per today. So this buyback program is a flywheel for the ecosystem, is a flywheel for the token holders as well, and the stakers, and we are very, very proud of the progress it has made, and the expected or projected buyback for the coming for the second semester of 2025 is about south of $2 million, $1.8 million, but this will vary obviously with the volume recorded on the DYDX chain. So happy to cover this topic on an ongoing basis during our monthly call and kind of monitor with all of you the progress of the buyback program. Now is a good time to invite our friends from 21Shares, which have been a very close partner for the DYDX community and the DYDX ecosystem overall, launching last week the DYDX ETP. So to give us a little bit more on a highlight on this milestone for the ecosystem of DYDX, we have Max coming from 21Share. Thank you so much for joining us, Max. Thank you for also putting together this beautiful purple 21Share logo behind you. We look forward to hear how this 21Share DYDX ETP came about.
No, I should be the one thanking you. It's a pleasure to be here today. We're very excited to have this opportunity, thanks to the DYDX team. But yeah, I'm Max. As I was introduced, I'm from 21Shares, where our mission is really to bridge the crypto world with traditional finance. Now, if you haven't heard about 21Shares, we do this by creating simple, regulated, exchange-traded products that allow traditional investors to access crypto, to get crypto exposure through the exact same platforms, whether it be brokerages, exchanges, that they already use and are already familiar with. So we boast over 50 products live today. We have a track record of 6-7 years. And as a result, we've really built the broadest suite of listed crypto ETPs. And now with this launch, we're very excited to expand that to capture one of the most exciting areas in the crypto space at the moment, which of course was already presented by the DYDX team, but that's decentralized derivatives. Now, if we go to the next slide, you'll have a sneak peek into the product itself. So obviously this is the world's first DYDX ETP, and the objective is simple. We want to track the performance of the DYDX token through a transparent, regulated instrument that removes some of the operational hurdles for traditional investors. As was mentioned, this was listed last week on Euronext Amsterdam and Paris. Given its nascency at the moment, the product, of course, boasts just shy of 100K in assets, but given the strong demand and strong activity that we're seeing for decentralized perpetuals or decentralized derivatives, generally speaking, we do expect this to continue to expand over time. And from an investor's perspective, what this really means is you now gain or can gain exposure to the DYDX token, one of the longest standing and now one of the fastest growing DeFi protocols, directly through your existing accounts in the same way that you'd buy any stock or any equity or ETF. Now, if we go to the next slide, maybe we can unpack a bit the benefit of what really an ETP brings about. And thanks for zooming in. That's very kind because I think it's a small picture. But as an investor, really, the key benefit is access. Now, of course, if you want to use the DYDX protocol, if you want to trade on it, if you want to interact with the ecosystem, of course, you'd be naturally using your own wallet. But not every investor, particularly traditional investors, not every investor is ready to take on that operational or to take on that technical hurdle. And that's where an ETP really comes in. With our ETP, you can gain exposure to the token's performance without having to self-custody, to go through a decentralized exchange, and we aim to remove a little bit of that complexity for traditional investors. These ETPs, this ETP is physically backed, so the assets are held with an institutional grade custodian, and the trading, once again, done on regulated traditional exchanges. So yeah, the ETP really offers a very compliant, transparent, and I would say traditional investor-friendly way to get some of this exposure to the token itself. Now, if we go to the next slide, and I think you know, the DYDX team already presented this brilliantly, and they know about their platform better than I do, of course. But one of the big reasons we launched this is because, you know, decentralized perps in general are really at the very center of crypto activity. Today, over 75% of crypto volume, as was mentioned, is coming from perpetuals. But even on-chain weekly volumes, which is what you see on the chart there, has consistently starting to top above 100 billion. So this was a complete no-brainer for us, and that's why we teamed up with the DYDX Foundation to launch this ETP. Because investors, we should give them the opportunity to capture one of the most important and one of the most exciting trends that we're seeing in crypto, and derivatives sit right at top of that list. Yep, and I mentioned this earlier. This reinforces a bit of our product suite. We boast now over 50 different ETPs, but I do think that this segment of the market within DeFi, this subsector, was not yet well represented in our product suite, and this definitely adds another flavor for investors to get access to. So we're very excited here. And we hope to make this a very successful launch with the support of the DYDX team. Thanks for having me once more.
With the 21Share ETP launch, making the DYDX ecosystem and DYDX token available to millions of new potential investors. I'd like to double click now on some recent strategic initiative at protocol level. One of them is a program called DYDX Surge. So DYDX Surge is essentially a multi-month campaign and distributing incentive and organizing competitions with incentive of $20 million distributed over 9 months to essentially activate different categories of markets and categories of users around the DYDX protocol. The season 6 is on the way. It comes with a simplified ways to kind of articulate this incentive campaign where 50% of the fees are coming free of charge. There is a rebate on the trading fees, and also there is a subset of the monthly incentives which are going specifically to UI users of DYDX.trade. So the goal here is essentially to activate not only the programmatic and sophisticated users, which are using mostly API, for example, but also incentivizing the retail side of the order book, which is very present on DYDX, but which we want to keep growing. So having a specific portion of this monthly rewards towards the UI users, it allows us to essentially keep a healthy ecosystem around DYDX users and a good balance around the order book between institutional and systematic trade flow versus retail users. So that's something to follow, and I really invite everyone to look carefully at this program. There is a lot of alpha for traders taking the time to study and basically capture this opportunity of the search program. On the next slide, we are essentially highlighting some of the communication made by DYDX Labs. DYDX Labs is extremely busy right now, as they are always, to essentially keep innovating and releasing new features around the platform. So in the coming weeks, you will see going out social logging. Social logging to the platform means that people and users will be able to essentially connect to DYDX using any wallet of their choice, but also their email or some other social media identity to essentially keep expanding the base of retail users around DYDX. There is also announced in the coming weeks a Telegram trading bot, which will be released by Pocket Pro, which is a company acquired recently by DYDX Labs. So we very much look forward to this new way to access and consume DYDX. I'm personally always excited when I see that DYDX is essentially getting delivered and approach directly the users wherever they are, and we can touch on this a little bit later on. Spot trading is also on the roadmap for DYDX Labs within this year, so that will be a very elegant complement to the leadership of DYDX in the crypto derivative market, complementing it with spot trading. So very excited about this future launch as well, which should come along together with buy and stake DYDX directly within the front end, which will be a very interesting way for users to essentially put their rewards immediately to work within their experience of DYDX. And there is also some works being made around staking and optimizing the trading fees. So more on this on the DYDX forum and in the coming weeks as well. Some other strategic initiatives which have been delivered, they are live today on DYDX. If you miss them, we wanted to basically resurface them for you and making sure you capture their impact on the DYDX ecosystem overall, on the DYDX economics overall. One thing which I've been really paying a lot of attention to is the recent integration between DYDX and Crypto.com. Crypto.com is obviously a leading centralized exchange with a lot of activities around their on-chain wallet. And this integration is a native integration of DYDX within the on-chain wallet of Crypto.com. And essentially, it brings potentially an additional 1 million users on DYDX, trading on the protocol, but using the interface of the Crypto.com on-chain wallet. So it's one integration, potentially 1 million of additional users on DYDX, and access for the users of Crypto.com to more than 200 market to trade. More of these integrations are on the way. We can hear from different market players that there is a lot of people leveraging the builder codes, which was released by the DYDX Labs team, essentially enabling any project in crypto to come and connect directly to DYDX and being able to kind of share some of the protocol revenues together with their app. So that's something to keep an eye on. And this first milestone with Crypto.com is very encouraging. The other thing which also caught our attention in the past week on DYDX is the emergence of real-world asset, RWAs, on DYDX. As you know, DYDX markets are permissionless and launchable in a permissionless manner. So it means that there is a lot of different new markets which can come and being listable and potentially tradable on DYDX. And one of them has been listed by the community a few weeks back, and that's the Tesla stock. And what it means, it's essentially not only the users of crypto in general and DeFi can buy their some stocks on chain, but when this stock essentially reaches DYDX, it means it becomes a perpetual product. So it means that for any DeFi users using DYDX, they can take a position going long or short with or without leverage on a real-world asset, just such as a stock like Tesla. So that's something which is very interesting to follow, and also something which will keep bringing more activity around the DYDX protocol. We're reaching the end of this first monthly update for all the analysts around the DYDX ecosystem. We receive a number of questions in the Q&A, and I'd like to call Winnie maybe to give us a little bit a sense of what are the questions top of mind for the audience. I'd like to thank you as well, Winnie, for preparing this first call. Thank you for that.
Yeah, no, happy to facilitate this. So yeah, we received a couple questions and I singled out 3 of them. So without further ado, the first question is in relation to the DYDX ETP. And the question is, with the launch of the 21Shares DYDX ETP, how should token holders think about the impact on DYDX demand?
That's a great question. Thank you for it. in my view, the DYDX ETP with 21Shares brings really two things which are very important. So number one, it keeps elevating the brand of DYDX. We have the chance to be among the very few projects which qualify in terms of audience and success to become an ETP. So that's something which helps the brand's visibility towards a way larger audience and mind share way beyond the crypto circle. So that's something which is great for marketing. This ETP also is great for the buyback program. We discussed the buyback a few minutes ago. By default, 25% of the fees of DYDX are used to buy back tokens and basically restaking them. So there is this flywheel, and there is also this kind of constant buying pressure from the protocol itself on its own token. In the coming weeks, the 21Share ETP is planned to be staking as well. So with every time there will be more units of this ETP being minted and purchased by investors, they will be automatically staking and also essentially buying back some tokens. So this is also another way for the protocol to kind of magnify and grow this flywheel of growth of activity, meaning growth of fees, meaning growth in terms of buyback purchasing power. So I think that's a great way to feed the flywheel of buyback, but also keep enhancing the credibility of the brand for DYDX. And maybe lastly, as it was mentioned earlier by Max, it basically gives access to millions of new investors to DYDX directly via their broker of choice, should it be Interactive Broker or any, via the ISIN number. And that's something which is also great for the token itself, being essentially available to many more potential investors.
All right, the second question is around DYDX and its competitive edge. And it reads, DYDX has now processed over 1.4 trillion in cumulative trading, and it remains the most operationally mature decentralized derivatives protocol. How does the team plan to sustain its edge as more centralized and decentralized competitors enter the market?
Happy to take this one. Thank you, Winnie. I think, fundamentally for a perpetuals trading platform, competitive advantage comes down to performance. There's two particular things that the labs team just highlighted in recent blog posts, which, we're in the weeds at DYDX and wanted to share with everybody. One specific, or two of the items that the community is currently contemplating are the idea of designated proposers and the idea of the order entry gateway. Both of these improvements, once implemented by the DYDX community, given that there needs to be a formal governance proposal, should enable reduced latency and increased block time, which we anticipate and should actually improve delivering a SEX-like trading experience while preserving decentralization. Fundamentally, we are a DeFi protocol, and decentralization is something that we're incredibly proud of in the DYDX ecosystem, given that the way that DYDX is operated is by virtue of an in-memory order book inside of every validator that is proposing blocks on DYDX chain. So these two features should enable DYDX to increase its performance, which is, again, fundamental, I think, for all users of the platform, specifically programmatic traders, market makers, professional traders, which is obviously very important for healthy market structure. Also, specifically, you highlighted this in the question itself, but DYDX, from my perspective and from our perspective, has proven its resilience at scale and has earned the trust of many institutional and sophisticated traders. You don't get to 1.4 trillion in cumulative volume by offering, a subpar product and subpar user experience. And I think, when we think of competitive advantage and what is up next for the team, Charles actually covered it in one of the last slides, but I think there's a very inspiring and attractive roadmap coming for the DYDX ecosystem, which the labs team has promised to, deliver in the form of the open source software. I think the things that I look forward to personally are the Telegram trading bot, spot trading in a spot market for DYDX, and then, as Charles highlighted with the example of Tesla, more RWAs and potentially synthetic equities. So all in all, I think DYDX is in a very good competitive place, and it's just time to execute right now on the roadmap. Thank you.
That actually leads into the next question pretty well. And the question is in relation to how the ETP can help funnel capital into new opportunities. So the question is, which upcoming product developments, such as the Telegram trading, spot markets, or real-world asset perpetuals, are expected to resonate most with institutional allocators? And how could the ETP help funnel capital into these new opportunities?
Well, that's another great question. In my view, the Telegram and spot trading are very important, and they're part of the of many different elements of DYDX, which are compounding and growing the protocol overall. So one thing I'm very excited about and spending some time together with the team is the RWA topic. So real world assets are obviously an existing product market fit on the old rails of traditional finance. There is a massive audience. There are massive numbers behind this category of assets. And what I find very interesting is how we can renovate this massive market of real-world assets. Should it be treasuries, equities, indexes? We see the early days of this market coming on chain. I think everyone have followed closely the Ondo global market launch a few weeks ago, with more than 100 stocks being listed and very quickly raising to 100 million TVL. Kraken is also listing stocks via X stocks. Robinhood is planning also to get stocks listed on a blockchain of their own. So this market is definitely boiling. And why it's catching my attention is essentially DeFi and crypto in general, but more specifically DeFi, as the opportunity to bring on the table very unique value, something which cannot be reproduced elsewhere. And I'm excited to know that traditional stocks such as Tesla or many others will not be only tradable a few hours a day within a few time zones and 5 days a week, but they will be essentially tradable 7 days a week in whichever time zones with the right infrastructure behind that. And where DYDX go one step further and bring something very unique to DYDX is to essentially bring the wrapper around this tokenized stock and making it a perp, being able to essentially bring leverage or bring directional trade to investors whenever they decide to take such position, and being able to go long or short with leverage or without leverage. And that's something which is a very unique and very different proposition, and which kind of built on the top of this very massive trend of traditional assets sitting on traditional finance rails and infrastructure, migrating away into on-chain solutions and protocols such as DYDX. So the RWA is still a small market, about $500 million today, but it's definitely a market which will explode and grow into an exponential way. So something which DYDX captured very early on, with a very unique proposition of essentially creating perps around all these assets which are coming on chain. So very excited about RWAs.
Yep, that's all questions on my end.
Thank you so much, Winnie, Josh, Max. Thank you so much for joining us. Thank you to all of you for joining us today on this first analyst call. We welcome your feedback, so please share with us your feedback on this first session. The conversation continues on our forums, on our social media. You can reach to us as well with all kind of questions. We are very happy to keep the conversation running. And we look forward to the next announcement from DYDX protocol, and we look forward as well to the next DYDX analyst call in a month's time. Thank you, everybody.
Thank you. All right, so